All right, folks, so 2025 will be challenging, and I know what you think. You're probably saying, hold on a second, we're reading all these blogs, we're reading the newspaper, we know what's going on. All these high paying people in the high paying positions are saying otherwise, and the market will pick up at 2025. Yeah, okay. Look, it's not gonna happen. I'm telling you. It's definitely above my pay grade, but it will not happen. And there are indicators. We are in a bubble for years now, and the bubble popped. It just didn't pop dramatically, but it has popped. So now, when you say, okay, look, why didn't it collapse? It has not collapsed yet, but there are definitely heavy indicators pointing towards a heavy collapse. And you're asking, okay, so explain, and I will in this video. But just to bring you back to 2022, majority of these high-paying people in high-end positions saying interest rates will not go up, immigration will go up, please buy, go and buy, no listings, shortage of everything, keep going, keep going, keep going. Well, things changed. How they changed, where they changed, and why they changed, I don't know. But we know it changed. Interest rates went up, inventory started to skyrocket, immigration got cut down, and all of that stuff. Yes, maybe they're holding onto the trend. Maybe they're trying to save it, save the real estate market, or save that major burst and a major collapse. Maybe they're trying to do their best. I don't know, right? But I know that it started in 2022. It has started, and we have seen significant falls outside Toronto GTA, and we are even seeing price drops in Toronto. Okay, so now when you're talking about pre-construction, and I'm sure you heard it on my channel, you heard it on the other channels, everybody's talking about it, right? I was talking about 40,000 units coming up in 2025 a year ago, right? And then another 35,000 units in 2026. But let's talk about that for a second here. So a good indicator is that, when people don't have a 20% down, like a down payment of a 20%, to buy a property that's currently available for sale in order to qualify at the bank, they would turn to a pre-construction, right? And allow themselves a little bit of time so they can save the additional 5 or 10% or however many percent they're lacking behind. But to shortcut that time, because there's also time into play, right? So I will buy it today. I will wait 3-4 years. I will not miss the boat. It's a pre-construction unit. By the time I get it, the prices are up. I got my down payment completed to 20%, and everybody is happy. And then at that point, I will decide what I'm going to do. Either sell it via an assignment sale, which means I don't even get the mortgage. I just sell that paper to somebody else, or I take the unit, put it as a title, take a mortgage on it, lease it, right? Rent it out, or move in, right? So there are 3 options, and they were definitely good. But hold on a second. None of that is happening. These pre-construction sales are dead, right? Like, they tried everything. They tried lowering the price. They tried giving more money. They tried igniting it in different ways. They're trying lowering the down payments. So what is the problem, right? What is the problem? Well, one is an influx of inventory. Imagine having 70,000 or 80,000 units. So where's the demand, right? Who knows? Like, maybe it's not going to be there at all, right? Second point is nobody wants these units anymore, because what's the target? You're going to buy a half a bedroom or a bedroom, and what are you going to do with it? You're going to rent it to who? There's going to be probably thousands of these units for lease or sale or whatever, right? And they're not good to kind of live in them. They're more like hotel rooms kind of thing, right? So basically, the affordability is not there. People cannot save any more money. And we have seen the first fleet of people that gave up consciously or they couldn't hold on anymore. So from 2022 up to present date, 20% of these investors, speculators, people owning couldn't hold on anymore. Ridiculous price or ridiculous amount of carrying cost monthly in order to own real estate. So they just gave up, right? And they said, look, I'm willing to take my loss and I'm out, right? So it's about 15 to 20%, and that's how much the actual real estate market dropped, right? In accordance to people kind of shifting or leaving or giving up or however you want to call it. So the first indicator, pre-construction, is done. So people cannot even save that 5 and 10% initial, right? So that's gone. Death ratio skyrocket. Student loans are back. Visas, like you have to pay, obviously, minimum payments and all of that. But people are up to here in debt, up to here. They cannot hold on to it anymore. The actual affordability life, like necessities, gas, I'm not even talking luxurious items like you going to a restaurant or treating yourself or your family or whatever, a spouse or girlfriend or something like that. It's not even on the table yet. So if you take all these things into consideration, what's going on? People don't even have funds to get rid of the debt that they already have, right? And then on the other side, all these investors that have money are waiting. They're not investing. And yes, there's always going to be those sharks. Well, let's call them sharks, but no, like let's call them maybe smart people. I don't know. Or let's call them people that could see a little bit further, right? So they will pick up these properties for, like cents on the dollar. And it will happen. Whether it's going to happen in 2025 or 2026, but it will happen, right? So we're falling apart very quickly here, right? So people cannot return, and then they cannot even save. How much, or how long? Okay. Well, first question: how much can they save a month, and how long is it going to take them to save a sum, right? And viewer from the channel, like he has been constantly commenting, and I want to thank him for that, being involved. He mentioned something very specific to his own personal situation, and he said, like, look, when I bought my house a decade ago, like, it was 3 times my earnings, and he was earning 6 figures at the time, so it was 3 times. So the house is probably worth at like $350 or $380,000 outside the core Toronto, right? Now the same equivalent house is 15 times his earnings. So how is this even possible? How is it possible to carry all of that? How is it even possible to get into the game? So the cracks are so visible now, right? And it's just a matter of time. And now, like, obviously these people that are saying, like, look, we're reading, from reputable sources that the market will go up. Okay, let's talk about that scenario, because we have to take every single scenario into a consideration, right? A complete bust, complete fail, prices going up, what will happen? So let's say, hypothetically speaking, let's say we see an increase of 5%. And if we take a house that's worth $1 million today in the beginning of the year, and let's say there's an increase of 5%, that's $50,000. It's fine if everything is fine. But if we see, which we will see, a huge influx in springtime, which is usual for a real estate market in general, but this will be abnormal. Everybody's waiting like a sports game, right? Like, okay, yeah, springtime, we will list then because we have the chance to get the most amount of money and the chance to exit, and we don't want this pain anymore, and all of that stuff. Can you imagine how many are waiting for this particular moment? We already see that listings are already not skyrocketing, but they're definitely increasing on daily basis. Every day, like it's going like that. When we hit the spring, it's going to shoot up like a rocket. So what will happen? Even if, like magically, somehow, somewhere, we see an increase of 5%, it will not be enough, because your competition will kill the outcome, if you know what I'm saying. Like just the influx of listing, just the competition will dilute that 5% gain, if there's even a possibility for that, right? And let's not get into, our dollar being weak and everything that has been going on, and all the tariffs that we might see an increase of 25% and all of that stuff. And yes, people say, look, if we see that, the housing prices and, the labor and the cost of building and all of that will go up by, 20-30%. Yes, okay, let's agree on all of that. Let's agree on all of that. Let's say it does happen, and let's say it does go up. If people don't have the ability, the funds, and the savings to purchase it, it doesn't matter. It doesn't matter. What are we hoping for? To buy a property today at $1 million and expect it to be 15 million in 10 years from today? I mean, I don't know. Is it possible? Maybe it's possible. I don't know. But it's unlikely, because people don't have the ammunition. They don't have the funds to actually get into the game, period. So what will happen? Eventually, these investors or speculators that have been doing this for a long time, they know the game. Get in, pay off a little bit, take out the equity, take out the money, buy another one, take out the equity, take out the money. So you might have a neighbor that has 6 properties and is more broke than you are. On paper, they look brilliant. They have all these properties, they have a huge headache, they keep smiling. But trust me, they're more fearful than you are, right? So just take that into consideration. Not everything that you see or that somebody is telling you means that it's correct, or that they're floating so comfortably above water. Who knows? I don't know. But I hope you got some value from this particular video. If you like anything else that you see on the screen right now, please continue watching, and I will see you in the next one.